We are pleased to report that 2024 was another incredible year for Sasfin Asset Consulting, with assets under advice now exceeding 11 billion rand. This includes over 210 pension schemes consisting of small to medium-sized businesses, multinationals, and large institutions. We continue to grow strong relationships with our clients on the back of our sound investment philosophy and advisory model, as well as the continued dedication and focus of the Sasfin Asset Consulting team. As we look for new ways to innovate, we are excited to announce that we will be rolling out a new service model in the first half of 2025. We are also in the process of developing an innovation sleeve which will form part of our investment strategy. This will have a focus on alternative investments, including private equity, private debt, infrastructure, as well as a global innovation fund where we invest in companies focusing on industries like fintech, health tech, robotics, and artificial intelligence. We believe that these developments will not only improve long-term risk-adjusted performance for our clients, but also improve member outcomes at retirement.
The third quarter of 2024 saw central banks globally easing monetary policy as inflation declined. The US Federal Reserve made a significant September rate cut of 50 basis points, the first since the pandemic, while the European Central Bank and the Chinese Central Bank also eased rates. The International Monetary Fund lowered its global inflation forecast for 2024 down to 4%, from over 7% in 2023, and projects 3.2% growth for 2024 and 2025. Advanced economies are expected to grow at 1.8%, and emerging markets expected to grow at 4.2%. US CPI reached 2.4% in September, near the Fed's target, while South African CPI dropped to 3.8%, below the midpoint of the 3 to 6% range. The South African Reserve Bank cut the repo rate by 25 basis points to 8% due to the downward trajectory of inflation. These monetary policy decisions were welcomed by markets, with global stock indices, commodities, and the JSE All-Share Index all reaching record highs. The JSE All-Share Index rose 3.8% in September, delivering a 12.6% capital return year-to-date. The rand strengthened against the dollar in the third quarter, supported by the SARB's smaller cut rate, improved domestic confidence, uninterrupted power supply, and a reduced current account deficit. This year also marked a pivotal election cycle, with 64 countries representing nearly half of the global population heading to the polls. Donald Trump secured a second term as US president, strengthening the dollar but pressuring emerging market currencies like the rand, which fell 1.7% post-elections. Trump's inflationary policies could keep US rates elevated longer. However, November brought another 25 basis point Fed cut amid economic uncertainty.
Domestically, South Africa's Government of National Unity has bolstered economic sentiment. The JSE All-Share Index gained 15.2% in the third quarter, and government bond yields fell to 3-year lows. Business confidence improved significantly, with optimism for the future in multi-year highs. The 2024 medium-term budget policy statement reflected fiscal discipline, avoiding major bailouts for state-owned entities and emphasizing fiscal stability. The government is making progress on its action plan to exit the FATF grey list. Exiting the grey list would help with reducing business compliance costs, strengthen financial stability, and support the fight against crime and corruption. On the regulatory front, the two-pot system has been in effect since the 1st of September 2024. The two-pot system gives members of retirement funds an opportunity to access their funds in case of emergency, whilst helping them preserve a majority of their retirement fund savings. The two-pot system has worked well to the extent that members have no tax issues and also qualify to meet the minimum withdrawal amounts. The sustained high levels of interest rates and inflation post-COVID have taken a toll on members of retirement funds, resulting in them defaulting on their debt repayments. This was evident in the large numbers of retirement fund members who have participated in the two-pot system to access funds for emergencies. To date, SARS has issued 2 million tax directives, allowing 35 billion rands to be withdrawn from pension fund members' savings pots.
Despite economic resilience, global growth outlook remains subdued by historical standards. The geopolitics, specifically the conflict in the Middle East, poses a downside risk to global growth and a possibility of volatile commodity prices. However, large-scale stimulus in China is positive for the commodity market. The rand will take cues from global events, specifically the performance of the dollar, wherein a softer dollar is supportive of the rand. Local reforms that offer hope include a sustained stabilization of power supply, fiscal reform and discipline, and the improvement of business confidence. If the GNU can maintain cohesion and implement the necessary reforms, the country could see a significant improvement in the economic performance over the coming years.
From the Sasfin Asset Consulting team, we'd like to wish you a happy and healthy festive season, and we look forward to seeing you again in 2025.